everyone, glad you're here this morning. Welcome to today's ad-free live stream. If you're here for the first time, my name's Tyler. Welcome. I'm so glad that you're here. I am here to help navigate you through the wild world of day trading futures. So here's what you can expect during these live streams. I'm going to be breaking down live price action. I'm going to be sharing my daily bias and real-time trades to give you a front row seat to all the action. So if you're watching this after the actual stream, you can jump right down to the key moments using the chapter markers below. You'll find all the trades that I've taken with all the details, explanations, so you can know exactly what I was thinking and why. Lastly, if you're looking to take the next step in your trading journey and you're looking to work with prop firms, I have a special discount for you, 80% off using the code DTJ to get 80% off your next evaluation. And you are in luck this morning because we'll be trading an eval in line with our funded accounts because it is a no news day today. So let's go ahead and open in prayer and we will get the stream kicking. So Father, we thank you that you have given us the ability to produce wealth. Today, we receive what you have for us in the market. We come against every spirit of anxiousness, every spirit of worry, every spirit of fear, whether we may win or lose a trade. Father, you have given us the ability to produce wealth. Therefore, we will walk in that. Thank you, Father. In Jesus' name, amen. Amen. Let's get going. How do you guys like, I'm prepping for some hunting season coming up. Getting ready for some hunting. I'm looking forward to that. Good morning, Ted. Okay, let's go ahead and get situated. Let's see what we got going on in the market. It looks like we have a little bit of a run before the opening bell. Let's go ahead and mark up our charts. Let's see what we got going on here. That's a big opening day, new day opening gap. Let's just double check. Where are we at? Right here. Yeah, it is. It certainly is. Let's mark it. That'll make for an interesting open. Okay, so we got our opening range gap, or our new day opening gap. So once I put the new day opening gap in there, I like to date it so I know what date it's for. And, okay. That's right in overlapping with a new week opening gap, which is totally fine. Let's find our midnight open. Here we go. Okay, I'm going to remove this weekly. This is the... Actually, we might leave that on there for right now. See what we got here. Let's mark our previous day low and previous day high, which is actually almost exactly next to our looks like we've ran the previous day low already this morning, but we still will mark our previous day low. We typically want to see our previous day low ran in the New York session. That's really what we're looking for. You can see how it tagged right here. It tagged it and then shot higher. So we'll see if it wants to come back down there or not. And then we have our previous day high. Sitting right there. Just a hair above the previous day high. Thanks, Ted. It's actually one of my only light jackets, and it was a little chilly this morning, but I am getting ready for some hunting. I gotta go scout out where I'm gonna go hunting this year. Okay, I want to do the daily range. We got 4 minutes. I want to show you guys something that I've heard several people talk about, and I've known it. I just haven't put much thought because usually it gets ran in the London session. %50 of the previous day range typically will be ran. If it hasn't been ran yet, it typically will be ran. So we're looking at that previous day. Is sitting right there. Or the midpoint of that previous day range. So from the high to the low, we find out where the middle is, and typically the following day will run that level. Now, how you get there is going to be what you have to determine if you want to take a trade opportunity. All right, so let's take a look at our daily. What do we got going in here? Let's get rid of some of this. It's just a little busy. I don't need all this. We're way down there. Let's mark our London low. So instead of targeting the previous day low, what we would be targeting is the London low. If we're looking for sell side liquidity. So London session pretty much went straight up during the London session. We're going to call this our previous day or London session high. I'm not as concerned about that because we're expanding higher. Instead of looking at this level, that's only if we were down here, I would be looking at this London high. But since we're past it, I'm not really concerned about that. I care more about the London lows. Not sure if we're going to actually get down there, but I do like these equal lows that are sitting right beneath here. All right, let's zoom in and let's start figuring out what we got going on. We got a little bit of a range going on here, and we ran. Potentially, we have already filled the previous day low with the wicks from the London session. Actually, from right here. Look at that. What time is that? Why did on Monday it drop like this at 6:33? You see what I'm talking about? That's just ridiculous. That's just straight up manipulation. So if this is the case, and that was ran at the end of yesterday's market, I'm looking towards the other direction. But however, we've already moved higher. We'll see where it goes. Ova, good morning. Welcome. I saw your message last night, or yesterday. Thanks for the kind words. Viking, good morning. How you doing, my friend? Okay, we swept the high right here at 8:01, and it is 9:30. Let's mark our 9:30 opening price. We have some sell side liquidity sitting down here. We're doing reduced size again today. It is no news. There is no news today. So because no news, I'm going to pull up the chart so you guys can see it. Today is Tuesday, and we have no news. It's all yellow folder. So we're really expecting the same type of price action as we saw yesterday. Now, the afternoon session was really nice, actually. Afternoon session ran very well. There are definitely some opportunities there. I feel like I need to move that here. Let's drop down to the 4-hour over here. Let's see what we got going on. I know there's a lot of stuff going on over here. I do like this new week opening gap that we created over the weekend sitting up here. And it's in line with our midnight open. I referenced that yesterday. It's our unfilled opening range gap with the midnight open and the new week opening gap. That's all unfilled. I'm going to use that as my initial draw on liquidity here. I would like that to be where I run. Maybe we run these equal lows first and then begin to push higher. Maybe we consolidate because there's no news. We're looking at about 200 points to get to that point. So there's plenty of opportunities to take some profit. If you guys want to see a trade live on screen, hit the like button. If you want to see a trade live on screen and not just on my other monitor where you can't see it, hit the like button for me. I think we will make that part of the gig. I'll take trades, I'll share my analysis, but if we want to see some of these trades actually executed on my screen, let's get to 20 likes. Let's get to 20 likes. That'll be fine. Mega Wick almost tagging 930. Yeah, I know. I saw that. But it left really no fair value gaps. So can't do anything about that. ERP, good morning. Glad to have you. Is that bouncing on a breaker? I'm not looking at this. It could be rejecting from a breaker. High, low, higher, high. Rejecting the breaker and moving lower. But we did run a little bit of sweep, a little bit of liquidity right there. So you could qualify that. But with no news, I'm just not as gung-ho about taking something right off open. I kind of want to see what kind of price action we're going to have. So we're going to be patient. We got a 4-hour fair value gap that we filled. This actually candle filled it here. So you can see this 4-hour. 4-hour sitting right there. The top of the 4-hour, we filled that. 2 more likes. And then there'll be the green light for an on-screen trade when we get one. Looks like we should have our first fair value gap here, folks. I'm going to assume it's this one here. Let's see if it gets it to us. Good morning, Jason. How you doing? Glad to have you. All right, we just went and hit the 50% of the previous day's range. I'm going to see and keep note how I really haven't done a deep dive into what happens with the previous day range when that level's hit to see if it's a point of rejection or if it's just a point of draw on liquidity. We'll see. Jason, I am doing well. I'm doing well. As you can see, I'm outfitted for some future hunting in the future. We'll see. We're hoping to do some hunting this year. Went last year for the first time. Want to get my kids really into it. We do less technology. We don't watch a lot of TV. I let them play video games only once a week for an hour. So my thought is I want to get them involved with more outdoor activities where we're not sitting in front of a screen. I do like this little fair value gap right here that it came down into to the tick. Mean threat or the consequent encroachment was respected quite nicely with a bounce there. But as you can see, there's no fair value gaps on this push higher. So we have our first fair value gap here that we're watching. Let me drop down to the 15-minute here. We're kind of working our way. I still like these equal lows. I would have liked this a little. I mean, this is a breaker here now. Low, high, lower, low. We did close above it, technically. But you got to understand we're also running liquidity here that we already ran. So do we... I don't have, other than our higher time frame, this low resistance liquidity sitting right here. That liquidity... This is very attractive. This will be ran very aggressively. That's my expectation. Okay? Those levels there will be ran very aggressively. Maybe, and then that would give us targeting the London high, the previous day midnight open, and filling 710, the new week opening gap. Those are going to be my draws, and also filling the opening range gap as well. We just need to make sure we time it correctly. This is an issue of timing. Here's our fair value gap coming into. Let's see where the body closes in the next 15 seconds. That's no close below. If you're thinking that was a close below, no close below. I was going to say, if that gets quite aggressive, that would be a run. That would be a play to here. We're not taking it. Good morning, Cameron. Sandra, good morning. Charles, good morning. $11 seconds left. This is a setup right here to this low. Drawing the equal lows here. It did close, but it was on a retracement. I don't necessarily like that. I'm going to do a small play right here. And let's see what happens. Where are we at? My micros. There we go. Watching this first fair value gap. See if it wants to close above that or not. And it looks like I might be on the wrong side very quickly. Let's see if it wants to retrace here. Okay, that's a loss. I shouldn't have taken that. What I didn't like was how we closed. We closed, don't look at this chart. Look at this chart here. We closed into a retracement. That was my mistake. It originally was aggressive and then it closed here. I shouldn't have taken that altogether. Here's a nice... This wouldn't have been a play we wouldn't have wanted to take anyway because we didn't grab any liquidity. So we're going to sit and wait. And if it's going to continue to range like that, we'll wait till it wants to break out of the ranging. Way to go, Charles. Yeah, this is a B plus type of setup. What I took would have been a plus except for how this candle closed. Except I don't have a rule that says when we retrace up to here, don't take the short. So and if we do this, if we come all the way back down here, this price action is really wonky. This is stuff I want to stay out of. We failed this. It looks like we may fail this one. There's just a lot of ranging. When we see this, stay out of it. Don't think, oh, it's an opportunity. Morning, Deborah. You see that? Look at these candles, guys. That candle was 20. It was 20 handles, and it's literally going up and down. I'm not messing with that. Honestly, if it was decent price action, the trade that I took should have worked out. You can look at the candles immediately following the opportunity we took. Disgusting. Not running one way or the other, given 20 handle ranges up and down on a no news day. Probably a good call, Deborah, sitting and waiting. No news days are lower probability days. So I can't be mad for the trade that I took and it being a loser. I'm not mad. It's just it took me taking a trade to find out if it was going to be this type of day. And I found out really quickly. It immediately ran against me. I might be interested if it closes aggressively down. Oh, it didn't even see that. Look how where it's landing. I'm not going to do nothing like that. If this candle was like down here on that big push, I probably would have taken that to these lows. But it's not even doing that. It's stopping right at our first fair value gap. So we'll sit. There'll be a better opportunity. Don't think this is your only opportunity. There's always another one. It literally just printed a barcode. That is correct. Oh, I thought we hit 20 likes. I was not supposed to take a trade on screen until we hit 20 likes. Somebody hit the like button for me. Make it official. There we go. Okay. We are green lighted for another trade. That's only if it gives it to us. Obviously, I'm not going to force a trade if there's no trade. And I don't think you guys want me to do that anyway. Look where the bodies are closing. Even though this is sloppy, I'm going to say this is bullish. To be honest, I hope I'm wrong. I really would like it to run the sell side first. So far, this red line is the midpoint of yesterday's range from high to low. So far, we've just seen wicks come above it. Now, I'm not saying that it couldn't be for another reason, because this is also our last fair value gap that hasn't been addressed. Oh, did we forget to put our opening range gap on here? I forgot to put our opening range gap. Let's mark that. Where are we at? We got lower. Wow, I can't believe I forgot this. This is a big deal. I want it to go lower first, folks. If it could give me an entry, I'd take it. I had that. I took an entry, and it ran against me. But I do like lower right now. I wanted to run these equal lows, which is halfway of this opening range gap. I just don't see an entry opportunity. You could say this one from 9:10 this morning. But I would prefer it to be up here. I'd prefer my fair value or my bearish inversion gap up here that I would take. So typically within the first 30 minutes, 70% of the time, you'll see half of this range filled. Now we got down through the first quarter and we have another quarter left. We'll see if it wants to fill it within the next 10 minutes or so. Waiting for this choppiness to subside to see if we can take an opportunity short. I want to go short to these equal lows, to this opening range gap, and then I would say for the majority of the day, I'm bullish. I am bullish up to these levels here. The new week opening gap sitting right here. Midnight open, previous day high, low resistance liquidity run right here. This is where I think price is eventually going to go. The narrative I think is lower first. At least I want it to be lower. That's where I'm looking. There's nothing long I can take right now. Dang it. I think it's going to run here. You look at that 15 minute, it's just like a giant wick. What does a 5 minute look like? Same with the 5 minute. All right, I think what I'm going to do, folks, on reduced size, I'm going to act as if this fair value gap has not been broken yet. If we get a close below this fair value gap, an aggressive one like we've seen in these candles, but they just wick back up. If we get a full body candle close here, I'm probably going to look at that as an entry. Move my stop to break even as soon as we hit this low right here, if it will give it to us. Right now, it looks like we're going the opposite direction, though. So maybe it's irrelevant. See, I'm watching this low resistance liquidity run that's going to be right here. My guess is it could just go pretty aggressively. I'm looking for an opportunity. I don't see one right now. We could look for an institutional order flow entry drill. A wick inside of a fair value gap. It could be this one right here, overlapping with this swing high. See if it wants to give us an entry there. But I do think we're going to run this fairly quickly. It's just too pretty. You see how pretty that is? It likes to make pretty, the algorithm likes to make pretty things and then mess them all up. All right, I'm gonna institute a new model that I mentioned before, that when we run into an order block and a fair value gap, when we get these sets of instructions that I think we're getting, I'll look at a long. Now, it being a no news day, this is not a high quality setup. So right now I'm looking for an entry into this fair value gap to take a long. I doubt it's going to give it to us. We do have a fair value gap on the 5-minute we're in right now. Oh, we did close above it. We closed above that. This is going to be ran. I'm going to show discipline and not just jump in. My concern is if we get down to this fair value gap, we could just break right through it, and that would be an inversion play to these swing lows. So you have to be careful on waiting for the bodies to close to see where they want to go. But I mean, that's gonna run. We just ran our first. I refuse to get on green candles. I have to get in on a retracement. If I'm going to take a trade, it's going to be off of an order block. I'm not just doing this because you could easily retrace. From this point, we could come all the way back down to here. And that's 30 handles. So you have to decide, are you willing to take on a risk like that? And I'm not. I'm not willing to take on that risk. And I'm willing to let the trade go without me. Let's drop down to the 1 minute here. And I'm going to put this over on this side of the screen so we can see it as if. This is the low resistance liquidity I'm talking about. This is in line. So what you see here is what's going to be ran. See how it's just swing highs with no fair value gaps? This is what we call low resistance liquidity. This will be ran quickly. Well, it should be. It should be. All right, 2 minutes till 10 o'clock. Here's our first order block. Well, it's not an order block until we get a green candle to close above it. All right, I'm gonna try it off this order block, assuming this is turning into an order block, and we're gonna see if this wants to go. This is the high right here. This is the last swing high. Moving stop to break even. Looking for this high to be ran. And we'll take off one contract at that high.
Order submitted.
Make sure that that's around. Yeah, that's in line with that. $119 ticks. 130 ticks. What did I tell you guys? That's exactly what was going to happen. All right, I'm looking for my new week opening gap low, which is right here. And I will take my last contract off there.
Order submitted.
We have the new week opening gap from October 10th is sitting right where my limit order is. Okay, just rejected the 929 new week opening gap high. I'm looking at my other chart, my main chart, and let's see, come on, hit it for me. There it is. All right, folks.
Order canceled.
You are welcome. Now, do you guys understand what I was referring to when I was talking about this low resistance liquidity run? Because that is exactly what happened. That erased all my losses. Plus, giving me, I mean, I'm not blown away by how green I am, but I'm green, which is always nice. Definitely on a no news day. What happened? How did like 10 people leave in the middle of that amazing trade? Did you guys, I mean, that was how many? That was 100 and, how many handles was that? I got in at 20,153 and I sold at 202. That was 49 handles, folks. They rage quit. That's possible. But I want you, there's two things we're going to take note of here, okay? Two things. Number one, we knew the draw. I called it way before, okay? We still have some more that we could reach to if you were holding an extra contract, but I wanted to target this new week opening gap. I said the new week opening gap. Look where I took my profit. As of right now, I got it by a tick. I got filled by a tick. 225 and the high was 250. I got filled by the tick. Like, this is a big deal. This was micros, Deborah. These were micros. This is a no news day. I'm doing very small size. And when they're copied on multiple accounts, it's like it still pays. It still pays. So, listen here. It went on a tick. If you're questioning the logic that this is all algorithmic based, that should go away right now. Look at this giant candle, and I said, I want to take my profit here. Out of all of this 49 handles worth of range, why did it decide to stop there and turn and go the other direction? Think about this logically. If this all was supply and demand, this would not happen. I mean, it would not happen consistently over and over and over again. This is what happens. It's algorithmic. Now, we called it based on this low resistance liquidity run. We wanted to see this low resistance liquidity run take place. Okay. We need to go lower. Okay, so we have this low resistance liquidity run to the left of us, sitting right here. You can see all of that right there. Low resistance liquidity run. This is all liquidity sitting up here. That's why, yes, that there were a ton of sellers up there. There were a ton of sellers up there. That's why it ran it so quickly, because they don't want anybody taking off their orders. And when did we get in? What did I say? I did not want to get in unless I saw an order block. Now, I got in before the order block was filled. The order block was created. But I waited for about 15 seconds left on the candle. And we were sitting up in this range. And I'm like, okay, I'm willing to take the risk that this closes above this level. It did. And then it literally took off. Okay? This just comes in time of watching price over and over again. But this is totally learnable. You can learn this. Okay? It's good stuff. And all of the stuff that I referenced, order block, liquidity run, new week, opening gap, midnight open, London high, all of that, I go in detail, and I'm actually recorded some yesterday and we'll be doing more today on the Purpose-Driven Trader Academy that I'm putting together. Hopefully that comes out middle of next month. That's the goal. I don't know, Deborah. I mean, that was quite a move. I don't know if it's going to want to go all the way back down there. It's already pretty choppy. And remember when I pointed out this candle at 633? I'm like, what the heck is this random candle? When I see a random, 633 and it ran 100 points. What happens at 6:33 in the evening? I don't know. Maybe we had, some Tesla gave their quarterly report or something. But here's the thing. This is a hunch. This is not backed by anything other than a gut feeling. When I see disgusting manipulation like this, and keyword and, it overlaps with key levels. We have the previous day low and two previous day lows sitting right here, and we wicked below it very aggressively. I can gut feeling reasonably plan that price is going to move the other direction. Do you see how I did that? I would have reasonably considered price moving the other direction anyway when we run these lows. But when we do it at 6:33 in the evening and it's a giant candle like that, it tells me that it may not want to come in and run these levels during the New York session the next day. We did on the London, we wick barely, but it just explodes higher. So I'm not convinced that we want to go back down. We may run these highs up here. We may run for these highs, especially, all right, two options. Either we're going to run these highs or we're going to play inside this range for the rest of the day. We either run these highs and then play inside this range, or we don't run the highs and we play inside this range. From this low, London low, to, let's just say, approximately this new week opening gap, somewhere in this range. Maybe war news? No. I mean, it could be. We're in such unprecedented times. We have elections. We have world wars. We have manipulation. We have people wanting to take their money out, not lose money, all kinds of stuff. Yaya, welcome. First time I'm seeing your name. I'm glad you're here, my friend. He is running a 1 minute time frame. Is somebody, Charles, what is the time frame that you see the low liquidity? Oh yeah, the 1 minute time. Well, this is the 1 minute time frame, Charles. Good morning. Yeah. I'm just still, okay, so even though I kind of expected it to hit this level, I'm always amazed when I see such precision. Such precision. I'm taking a screenshot. I'm not going to lie. Tony, what candle did you take the long on? I took the long on the 9:59 candle. Here, I'll show my executions here. So there's my executions. Oops. So I took the long right when we were running or about to close above this order block. I wanted this order. I said before this formed, I said I can't take a long unless I get an order block or I get some type of retracement. Here is our level. When it closed above it, knowing that we had low resistance liquidity, and I didn't even pay attention to this, but it was also 10 o'clock. Then we aggressively ran all that liquidity right at 10. I sold my first contract at 187 and then sold my second contract right at the new week opening gap, which is sitting at 20,202.25. And I sold mine at 20,202.50. 10 a.m. reversal. Yes, but here's what I'm expecting after we did all of this, Deborah. After we did all of this big run right here, I'm expecting it to be kind of choppy. I don't think we're going to get any decent runs. I think it's going to be back and forth, slowly going up and down. Single red. Okay. Yes, it was the 959. Yes, the next one after that. Creating the order block. Cheers. 10 a.m. reversal. That was a beautiful run. 100%. Ted, I feel you. Happens all the time. Happens all the time. What really determines a mature trader is your ability to handle when those types of things happen. I have good days and then I have bad days. I have good days and then I have bad days. As you become a better trader, the goal is that the good days typically outweigh the bad days as you become better. Deborah, great question. I struggled with a lot of these concepts in the past because I always ask the question, how do you know? How do I know that something's going to be created or not? How do I know if an order block? How do I know if a propulsion block is going to form? How do I know if institutional order flow entry drill is taking place? How do I know? How do I know? How do I know? The answer is you don't. You have to predict it. You have to predict the likelihood that an order block is taking place, is going to be created. So, we had this down close candle right here. Okay, I didn't and wasn't thinking of an order block until this closed. After this closed, my first thought was, does this want to go down more? Why? I had this level in mind. Does this want to go down more? And I said, you know what? If we do close above this right away, with this low resistance liquidity to the left that's sitting way over here, it could just run it really fast. So, my thought was, if I'm anticipating that it closes above, and if it does, my hunch is that it's going to run higher really quickly. So I I didn't get in this candle until about 15 seconds left on this candle's close. So it was going to close and show me 100%, whether it will show me 100% if I'm right or wrong. So in 15 seconds, I was going to find out if I was correct or if I was incorrect. I was willing to anticipate and take that risk in case it wanted to run higher on this candle. Now, you could have waited until this closed and then got in right here, because when this closed with 1 second left on the clock, this would have closed. You could have taken that trade with 1 second left on the clock and been sure that this was an order block. Why is it an order block? Anytime you have a green candle close above a down close candle, that creates an order block. Now, not all order blocks are created equal. Some are more reliable than others. I just happened to have the right time. It was 10 o'clock and we had the liquidity sitting to the left. So when you have your draw on liquidity and you have time, you can take regular order blocks as entries. I told you guys down here that I said I'm going to look for this to come into here and take a long off of a fair value gap, because I felt we got a set of instructions. The algorithm was given a set of instructions and it was spooling higher and it wanted to get to a specific level very quickly. You could tell just by these series of green closed candles that it wanted to go somewhere. How do I know it wanted to go somewhere when I saw this? Look at what it looked like before we actually took the trade. It was up and down, up and down, up and down. It didn't want to run. In fact, it stopped me out right here because this should have ran this low and it didn't. It was in here I also said, guys, I think this is bullish, but I really want it to go lower. I really wanted it to run this equal low, these equal lows down here and then run high. But I was like, this is just looking too bullish because of how it was respecting sloppily, I should add. It was respecting this fair value gap. And then green, 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 green. And I'm thinking, it just got its set of instructions. How can I get in? I'm not just going to take a long right here. That's just stupid to do. I need to wait for a retracement. I need to wait for an order block. I would love for it to come back down here. When this candle was created, my first thought was, I hope it comes down here. Then when I saw this started forming a green candle, I switched my thought process and said, what if we do close above this? Well, I bet you we could just run really fast after that. Because I was already telling you guys that all this liquidity sitting right here will be ran very quickly. I prepped you guys on that. That was going to happen. I was confident on that. This is just too clean, too smooth, too perfect. High, lower high, lower high, lower high, lower high, lower high. I mean, it's just too algorithmic. It was like it was created to be ran. Hear what I just said. It was like the algorithm created these lower highs intentionally. It generated and engineered liquidity by running price this way. This is what the algorithm is designed to do. It's designed to get people in the market and to give fictitious levels of support and resistance so that it can be ran later. Look how nice this is. Look how pretty it is. It looks as if this was created for a specific purpose. But if you aren't thinking that way, you're thinking, oh man, this is great resistance. This has 3 tags. It's hit this trend line 3 times. I'm going to go short. And you would be correct, and you could capitalize on that. You could make some profit. Boom. Make money off it. There's several ways to make money. You can use trend lines. But those trend lines will become liquidity at some point because it was created for that purpose. That was the main reason it was created. So I said this is going to be ran very quickly because anybody that has their stops, anybody that was going short here is going to have their stops where? More than likely sitting right above this high. Somewhere in this range right here. Somewhere in this range. Because they don't want to lose. So when price comes back, where is it? They don't want these people to remove their stops. So what does price do? It runs aggressively. Look how quickly it ran to these levels. This is a set of instructions with intentionality to make sure that the stops over here are not removed. It's what it does. It's how it gets large institutional orders filled. Can you imagine the amount of liquidity that was sitting right here when hundreds, thousands of, tens of thousands of traders are seeing this and they're like, oh, this is going short. Retail mindset traders going short, going short, going short. Put my stop. The algorithm knows and it wants to run that as fast as possible without looking too obvious. Ted, I do notice how some of the SMA indicators align with the fair value gaps and other PD arrays. Yeah, I'll be honest, I didn't use, is that the SMA, is that the short-term moving average? I'm going to make sure I got it right. That's how much I've used these indicators. I used indicators for a hot minute. It was a hot minute because I realized really quickly I could not rely on it. Oh, the simple moving average, yeah. I realized I could not rely on them at all, it seemed. The VWAP, I think the most reliable that I found, and I saw algorithmic patterns was within the VWAP. But once I learned ICT Concepts, I got rid of all of that and just looked at liquidity. Where is liquidity sitting? How are the candles forming? And it made it more simple for me. I know traders that use the VWAP and are successful at it. So there's nothing wrong with using it. It's just, I believe ICT was correct in his statement that this ICT Concepts is how price moves. It's describing the market. And when I realized, or when I came to accept that, man, this looks like this is in fact how the market is moving, it just gave me a language for everything. Okay, it looks like we finally, quote unquote, we have a bear flag, folks. Bear flag, going long. We still have the high, the upper portion of this opening, new week opening gap that is still unfilled. So we got an imbalance up here that I think price will eventually run to. We just ran into a breaker. Let's see if that breaker wants to hold. If you guys appreciated that commentary, appreciated the insight, hit the like button for me. I would greatly appreciate it. Let's see if if it goes higher, I think it could still have this very wicky type price action. Look at the difference between right here, this leg of this set of instructions, and then before and after. Very wicky, very wicky. We'll leave this right here so we can watch it, but I want to show you guys yesterday's price action here for a second. Yes, here's yesterday's price action, right? We watched this price action. We took 2 trades yesterday, and the entire morning and into the lunch hour was this horrible price action. You wouldn't have wanted to trade. And then after, in the PM session, we get nice, beautiful price action. Where do you think you want to trade? I mean, the answer is so stinking obvious. Do you trade in all of this? Or do you trade somewhere here? And how do you know? Well, the answer is you want to trade in this, obviously. Okay? How do we know when that's going to happen? Time and price. I haven't even looked. I'm guessing. I'm guessing right now. I haven't even looked. Let's just see what happens here. Okay. What is the time? We have noon right here. This is noon right here. Okay, so there's noon. I'm going to do some vertical lines. We're doing some analysis. We're doing some analysis here. There's noon, okay? Where's 1 o'clock? Okay, 1 o'clock. The lunch hour is usually from noon to 1:30. Okay, so there's 1:30 right there. Nothing. So when is our next macro? Our next macro starts when? At 2:45. Excuse me, at 1:45. Macro is right there. All right, when does the macro end? The macro ends at 2:15. Did anything happen in here? The answer is yes. We have a breaker. So you could have taken this breaker right there. Why would you take this breaker? Well, look at this series of candles right here. And what did it run below? It ran below all of this liquidity. It hasn't ran this one yet, but it ran all this liquidity. So it has the signs of price moving. Okay, don't want to take that because you're not sure yet? Okay, let's wait. Let's see what happens. We get the price is delivered from high to low from 2 o'clock to 3 o'clock. All of that happened in 1 hour. And the most active sessions, this is a 1 minute chart, 1 minute chart. Your best opportunity times for the market to make runs, if you had to pick 2 times throughout the day, it would be between 10 and 11 and 2 and 3 p.m. We didn't get a run between 10 and 11. So your next best opportunity for a run is going to be between 2 and 3 p.m. It does not mean it can't happen over noon. It does not mean it can't happen at the end of day. I'm just saying your best opportunity. So if you're going to be predictive, which you have to be, in trading, you have to be predictive. In trading, I'm thinking, okay, 2:15, 2 o'clock, crappy morning session. We have a setup right here. We had this nice displacement lower. My best opportunity would be right here. This would have been the best opportunity for a setup, and it delivered. You would have had to wait 15 minutes before it would have actually ran. I'm not very good at holding for 15 minutes, but it's possible. Or you just take this small move right here, because look at this small move it gave right here. Okay, from the first breaker, from the first time it hits the breaker, let's say you went short right there. 10 handle stop loss. That's 16 handles you could have got right there, just in that series of down moves. So opportunities are there. You just have to be patient and wait for them. And in this price action, back to today's price action, that's exactly what happened. I took a trade early thinking that we may run right away. We didn't. It stopped me out almost immediately. So I got stopped out. Then I was like, let's wait and see if we got any adjustments. We see price running, and then we took along here and got 50 handles. And now we're just doing all this price action here. Not very nice price action. We're going to see what happens in the next basically 30 minutes. I'll be on for 30 more minutes and we'll call it a day. We'll see what price wants to do. We hit previous day London open to the tick, and it looks like we could reverse from here. So previous day London high, we talking there, yeah. So let's see. Yeah, I like that sweep. I like this. Now, Sandra, here's what you want to do. How do we know if we may get a reversal from there? We now have to wait for displacement. You're on the right track. We're anticipating things, but we're not taking speculative trades. We ran the London high. Okay, great. What do we need to wait for next on our checklist to know that price may want to run the other direction? I like this low resistance liquidity, but to me right now it seems that this is the single-handedly fair value gap that's holding price higher and preventing it from running these lows, this low resistance liquidity. So now that we hit this high, I like this as a opportunity to go short right there. But we need to see displacement. I need to see an aggressive candle, not just a wiki candle. Is a market maker sell model? No, I don't think so. Ted, when I'm looking at this structure, I feel like it wants to move higher. We have this previous day high sitting here. I don't think it wants to do that. Oh, holy cow. Well, forget any short opportunities, folks. It looks like it's running previous day high sitting right here. Here's our previous day highs. Now, let's see if this was just a liquidity grab. This candle and the next couple candles will tell us that. If anything, it looks like a market maker buy model. Market maker buy model. I think it's going higher. And I think the end of that buy model is up here. And we got to remember this 633 candle. The 633 candle that just is random. That wick low. Price doesn't do that. So when it does that, it just grabs my attention to say, what the heck is going on here? This is manipulation for an intention to do something here. As of right now, I've closed my funded accounts, and I will only, if I take another trade, it'll just be an eval account. Eval at this point. Jason, 100%. Making 45 bucks is a good day. What's even better is making 45 bucks every day and then sizing up one contract and then making it 90 bucks a day and then being consistent with that and then adding another contract and then making it 130 bucks a day and then just keep going up from there. But it takes time. It just takes time. All right, so there's your order block that was created. Do you see that? And we grab liquidity on the next candle. Now I'm paying attention on what price wants to do. Right now we have this as liquidity sitting right here. Price hasn't hit those levels yet. And there's nothing higher on the 1 hour, or there's no volume imbalance. Or excuse me, fair value gaps other than this 1 hour. So this is the next point of liquidity. So let's mark that high and this high. All right, so there they are. We want to see, does price want to expand at this point, or is the body's going to stay relatively close to the previous day highs? My guess is we expand, because look at this on the daily time frame, guys. Look at this. I mean, you just got to put everything into context. When you put everything into context, it helps tell the story. Okay, here's today's candle. Look at today's candle. What did it do? What did it do at that 633 candle? What did it do? This. It ran the lows. We just ran the highs. Now, when I see a candle that runs both the lows and highs, guess what they look like? Look at this one. Look at this one. It ran the high. Then it ran the low. Did it stop there? Did it stop there and just turn around? No. It ran way lower. Here's an exception. We ran high. Then we ran low. But guess where we closed? We closed at the low of the second previous day high or low that we ran. We ran the previous day high first. Then we closed at the low. So, if I'm assuming that, I'm looking at this price action here and I'm saying we probably could go higher. And we'll probably close. If we close, it's going to be somewhere around the previous day high, or we're going to expand higher and close up here somewhere. That's what I'm anticipating now. So if I'm anticipating that based on my logic, I'm now going to potentially look for opportunities for that. It doesn't mean I can't take this short potentially right here. If price is going to give me a short after we run previous day high, I'll take it. I'll take a trade like that. Because we're inside the macro. Actually, this is not bad. I might take that in 39 seconds. Depends if we run this low or not. We also have this order block sitting right here that we're running into. Is it going to find support at that? $11 seconds left. I'm watching. This is an eval trade only if I take it. All right, I'll take that trade. Let's see if we want to run to this low right here. I'm not going to let this run against me now. It's hanging out at this low. Stop has moved to break even. Look at that retracement. I'm going to sell that. This is still a valid trade. Good trade. Actually, we're going to re-enter that. Let's see if it wants to go. I liked where this candle closed. It's in line with this. Let's see if it wants to. Technically, stop would be a close above this. I want to see how it reacts to this fair value gap right here. If we close above this fair value gap, I'm going to close the trade. I got back in probably too quickly. I had my analysis right the first time. If we close above this fair value gap, I'll get out of the trade. It's really close, so I'm holding it, seeing if it wants to push lower. Oh, don't, it does that every once in a while. Oh, I don't know what's going to happen right now. Son of a gun. You're seeing my charts frozen, and I think I'm still in a trade. It will eventually kick out of it, but I think I'm stuck. Yep, there it goes. All right, got out of break even on that. Fine by me, folks. I'll take the break even. Look at it. It ran, folks. It hit the level. Follow the rules. And I didn't even follow my own freaking rules. See what I mean? I want to slap myself in the face sometimes. Just, come on. Come on. Use your brain. Follow the rules. The rules work. We close below. Don't get out unless it closes above here. It runs the low. Telling you. Just follow your own rules, Tyler. Follow your own rules. Way to go, Charles. Hey, that's if you didn't take any other trades other than the other 10 point that you won, you'd be up 20 points. Are you up 20 points? Come on. I'm keeping you accountable. Way to go. That's great trading, Charles. Way to go, my man. All right, 11 o'clock is about to show up here. Now, these aren't fun to mess around with. These are hard to trade right here. I think we probably run short. But do you want to go short inside a fair value, a bullish fair value gap on potentially bullish price action? I don't. I like where this body closed. In line with this, we wicked into here. Let's see if this candle wants to expand right now. This one or the next candle needs to expand. That would confirm that this is an institutional order flow entry drill. time is right. We're at 11 o'clock. We're in a macro. Well, let's see if price wants to expand in this candle or the next one. If we don't, then that analysis is incorrect. It's not an IOFED. Institutional order flow, entry drill. IOFED. Doesn't look like it. Nope. So now we're watching this midpoint and the top of this new week opening gap sitting right here. Another wick into it. There's not a single fair value gap for us to key off of. Let's see if there's one on the 30-second. Nope. Nothing good here, folks. Okay, here's 11 o'clock in 5 seconds. We have a 5-minute fair value gap sitting right here. I think we could push higher here. You just got to be careful because we just did hit previous day highs. So anything, if I'm going to go long, here's what it needs to look like in my mind. We go long and we do something like this. That's what it needs to look like in my book. I need to find support here to know I'm going to go higher. And then maybe go long off of a breaker sitting like right there. But I do not want to go long when I'm underneath the previous day high. In my book, this is bearish. I want to look at this as bearish, but I don't think we are bearish. So how do I have confidence that we go higher? I need to find support above these levels. So if, in my opinion, I think the morning session is done with. We hit our target for the AM session. Lunch session is potentially consolidatory. And then we look for a move higher in the PM session. That's kind of what I think may happen. Because if you get a big move like this, more than likely we're going to continue higher, but we might get some consolidation first. If we don't, then it's a trending day. We got a trending day, and those are hard to trade. You could trade off of this, but I still don't like, I'm not a fan. This is a fair value gap that's including a volume imbalance. See that? When you have a fair value gap where the bodies do not touch, you need to include the volume imbalance inside with the fair value gap. Looks like another nothing candle. See, I'm giving you an insight in my head. I wanted to go long there, but then I looked at the time and there was 40 seconds left on the clock. 40 seconds left on this candle. Do you know how much can happen in 40 seconds? Well, I can tell you, this can happen right there. What was a full green-bodied candle is now red. This is why we wait for closes. Or now there's 10 seconds left. Do you think it's going to go green? Probably not. So this is a safer play you could go off of if you were thinking it was going to go short. You have to wait till there's like 10 seconds left on the clock. See how it wicked up into this fair value gap? Now potentially he's moving the other way. Let's see if it wants to continue or if it's still going to stay inside this range of choppiness. I just don't like where we're at, guys. I just don't like it. I mean, there isn't necessarily any structure that I'm liking. I even though we ran these highs, I don't think I want to take a short. There isn't any opportunities taking an inversion short. There's just right now there's nothing, and we're inside the macro with only about 8 minutes left. Okay, I will take an eval trade long if we get above this. If we have a close above that, I will take an inversion long on an eval account. If this was a funded account, I would not be taking the trade that I'm suggesting here. I'm allowing myself to be a little looser with my eval, but I'm still going to move my stop to break even basically as quickly as possible. I'm basically wanting, when we close above this, I want to see us run these highs immediately. If we don't, I will take a stop at break even and be completely okay with being stopped out. Being stopped out at break even is your friend. They're your friends. Okay, I can tell you what I want to see now. I'm looking at the 15-minute. We should run this low. We should run that low. I want it to run that low. This is a 15-minute candle. That means the 15-minute comes into this fair value gap, and it could give it the energy to then move higher. So we're looking for a sweep of this low. Do we got a 30-second in here? We only got 4 minutes left on this candle. On the 15-minute. I want it to hit now. I'm actually willing to take that short. If this closes green, I'm out. There we go. There's midpoint. This could reject right here. Watching the midpoint of this wick. I want to see the bodies get below this. There we go. All right, that was not an inversion model. That wasn't an inversion play. That was I looked at the 15-minute time frame. I knew there was 5 minutes left on the candle, and meaning we should see distribution take place in the last 5 minutes of that 15-minute candle, and we had this large 15-minute fair value gap that's just waiting for the candle to come into. So that was basically my draw. Now I would love a long. I need to wait 2 more minutes for this candle to close. It needs to be in the next 15-minute candle. So I'll be right back, folks. I'm going to use the restroom. Watch that new week opening gap high. See how it reacts, and with that midnight open. The other thing that we can draw on here is that midpoint. All right, this is a new 15-minute candle. Look how aggressive it is in the first 20 seconds. If we close below this level here, that's an inversion to this sell side right here. I could see this as a market maker, a mini size market maker sell model. Accumulation, or here is our consolidation, here's our accumulation, reaccumulation, and then we run these lows. But you got to know that we're outside of the macro time, so things may not be as consistent. I'm basically marking both sides because we hit liquidity, which means we should consider shorts, but higher time frame, I think we're bullish, even though we hit previous day highs. So that's why I'm kind of marking both sides here. You know, Ted, are you still here, Ted? I think you're right on the I think you could be right on the market maker sell model. I like these equal lows still. I think that's a real possibility right there. We also have our opening range gap that was not filled. How we get there is my question, though. Yeah, probably the afternoon, and I'm probably getting off here in the next couple minutes. So I got other things to do. Tomorrow, the next 3 days are going to be, in my opinion, better days of trading. We just have to be careful. I mean, honestly, we got to be careful every day we trade. But we got to put our game face on for tomorrow, because we will probably size up. We will probably do regular size, but we don't want to be too aggressive on our opportunities, because I've seen news days still not be very nice. So anyway, I think actually I'm going to wrap up here, folks. I'm going to call it a day. It has been, wow, 2 hours on in 15 seconds. It will have been 2 hours. So we're going to call it a day right here, folks. We will see you all tomorrow. It's going to be another fantastic day of trading. Hopefully you guys were green. If you weren't, I just want to encourage you. Submit to the process. Submit to time. Submit to the education. Don't worry about the dollar amount. In time, I promise you, it will come. It will come. So let's end with that. God bless you guys. Be safe out there, and we'll